Welcome to today's morning report with me, Richard Perry, market analyst at Hantec Markets on Thursday, 26th of July. We've had a really interesting move overnight. You've actually had some good news surrounding trade for a change, as the US and EU have seemingly come to an agreement to not pretty much sort of escalate their little spat. And sort of spiral it downwards into a trade war. So they've agreed to sort of hold off for now on trade tariffs and the escalation of the trade dispute as the negotiations continue. And this is sort of putting on hold whilst all the negotiations are going on about how they're going to deal with their trade going forward, and possibility of removing or going towards zero tariffs ultimately would be the ultimate goal if ideal, but whether that is actually possible or not remains to be seen. But still, that is the seen and perceived aim of it, and it sort of suggests that there is potential for movement and on Donald Trump and his sort of rather aggressive approach to trade. So that is positive. The one negative side of that suggests that he is actually going to get traction on the fact that he thinks he can now do the aggressive approach and get results. So you got the flip side of that. But anyway, subsequently, we're seeing markets strongly higher today. We're seeing in terms of where are they? In terms of equity markets in Europe. Look at that, the DAX, 1.43%. DAX is very export heavy, and subsequently we're seeing the DAX move strongly to the upside. CAC as well, very strong. FTSE 100 lagging though, interestingly, but still we've had a decent move. Now, S&P 500 closed higher yesterday on that news of the trade agreement between the US and EU, 0.9%, but then you had Facebook earnings really getting panned on the shares after hours, and subsequently the futures on the S&P 500 are down, and that sort of takes a little bit of sheen off the move there. But interestingly, look at the dollar. The dollar started to again sort of trade back below a bit of a near to medium term pivot, 94.20, and it's I'm going to show you on some of the charts whereby the dollar majors are starting to look a little bit of an inflection point and could be at a turning point for the dollar. But it is interesting that the dollar has just tipped over a little bit in the last day or so again. So you've got gold, which had rallied earlier, but subsequently unwound that move. And the markets we'll be focusing on now today will be the ECB. Now, ECB monetary policy is at 12.45. And is expected to show no change on rates, 0.0 on the main refi rate, and 0.4% negative on the deposit rate. Asset purchases unchanged, 30 billion per month at the moment, which will be slowed to 15 billion from September. So no changes there. However, it will be the definition of the forward rate guidance. The ECB said through summer 2019 for the forward guidance last month. Draghi is going to be pulled on that. He's going to be questioned on what that actually means, whether that means July, August, whether it means September, October, November, going out later into the year. He's unlikely to put any definitive answer on that, but still he is going to get questioned on it nonetheless. So that will be this afternoon. So it's not expected to see any sort of significant ECB changes, but you could get a bit of volatility around that decision. We've also got core durable goods at 130 for the US, expected to be 0.5% on the month, and jobless claims also. I've got the wrong time there. 1330, 215 expected. My chart today is dollar CAD. Now this is one of the charts that is showing this rolling over of the dollar. We've seen that the dollar Canadian retreated back to the support of this uptrend channel last week. That trend channel was holding pretty nicely, but then yesterday we saw a sharp downside break as the Canadian dollar strengthened, the dollar or the US dollar weakened, had oil price finding a bit of support as well, and the US dollar starting to roll over. We've seen a breakdown below the 30.62, which was the old breakout level. 31.25 had been a sort of a basis of support between 30.65, 31.25. That's now been broken on a closing basis, arguably completing a top pattern and breaking the uptrend, confirming with the breakdown on the RSI below 45. You've got the MACD lines, bear case lower, the stochastics accelerating lower. It all looks ripe for a correction now. So you'd be looking at using rallies into this sort of 30.65 to 31.25 as a chance to sell, I think. You can see that on the hourly chart, whereby you've broken lower, you're trading below all the moving averages on the hourly, negative configuration on the momentum indicators as well. All set up for rallies being sold into. So you sell a bear signal in that trading range there between 30.65 to 31.25. I think that would be a pretty good selling opportunity. You've got the move that targets around about 220, 230 pips of correction from 36.2, so that's what 28, what was that, 28 odd. So yeah, you could see a continued correction, certainly on the on dollar Canadian in the coming weeks if this continues to roll over, which it looks likely it could well do. So this is an interesting chart development on dollar Canada. So I wish you good luck in your trading today, and I will speak to you later.